Is cloud software the future? Is Salesforce the stock that you should be looking to buy right here, right now? Or is it an absolute conglomerate that is about to crash and burn? It's had its time and it's not coming back again, which you could look at Zoom as an example. That hasn't gone completely, but nowhere near the highs they've ever been. Same with GoPro and other stocks in the past. So is this going to be one of these other stocks? Or can we see the stock continue to rise as it has been? Well, let's get to it. We're going to do a stock analysis on Salesforce. We're going to look at revenue, net profit, earnings per share, dividend, if they have one, assets and liabilities, free cash flow, and everything in between. And then if you stay right to the end, we will give you a possible intrinsic value of this company right here, right now, and into the future, and see where you may find yourself with Salesforce going forward. Well, yes, remember to like and subscribe if you like the video. Let's get to it. Salesforce is the cloud software company that has been flying high. With 31 billion expected. 31 billion in 2022 and expected to be higher. It's going to be very good to see this improvement in the stock, which is what you want to see. But the net income of only 208 million is quite low compared to, So they've got a bit of work to do to continue to grow this business going forward. I think the net profit, they've got to try and find a way to improve that big time. Very low at the moment. Earnings per share, $8. That's very good. P ratio 25, so they got some growth. Not insane growth according to the analysis at the moment, but we will see if that continues, if it'll grow more, if it's going to slow down. The market cap of 200 billion roughly. Short interest is no short interest, less than 1%. 52-week range from 126 to 258, so it's more up to the higher side at the moment. So if you got it at 126, congratulations, because that's where you should have got it at. Not financial advice, but there's no dividend with the stock at this moment, and I don't see that happening in a while. But this was another good one I saw. Total assets of 92 billion compared to liabilities of 34 billion. So very, very nice. So a lot of assets. But the free cash flow is going a bit yo-yo. 680 million was 4.2 billion. So it's going up and down like a yo-yo. Obviously there is investments into different acquisitions that they're doing. So that's coming into that free cash flow. But you want to see improvement there. Long-term debt, $9.6 billion. So a lot of long-term debt, but they have been paying it off for the last couple of years, so that's a positive. You'll want to see that continue, and they want to really get that paying off their long-term debt quickly with the high interest rates for me. Shares outstanding, 973 million. It's been a bit of an up and down stock. Sometimes they dilute you, sometimes they don't, so it's a bit of a, not much to say around shares outstanding. I wouldn't really count that much. It's up and down. Return on invested capital, only 3.3%. So very low return on invested capital at the moment. So that's something they're going to have to really work on to get that going forward. How do we see a bit of a bull case for Salesforce right here, right now? Where is the positives for this company? They've had layoffs of 10%, so that's again, they're cutting their price down. They're expanding. If they continue to expand and continue to grow, that's what you want to see. And on the bear case, there's a lot of competition around with Microsoft, Adobe, Oracle, and the likes. Pressure's on, the high growth is gone. This stock is going to really start to plummet, and that's the end of days for Salesforce, or it's just going to be a mediocre company going forward. Can they really push towards something great? Well, let's have a look now. What you're all here for? Yes, the intrinsic value possibly of the stock for Salesforce. Well, how we calculate this is a Graham's calculator. We use it on TradeBrains if you'd like to check it out. With share price, earnings per share, growth rate, with the current bond yield gives you a potential intrinsic value. So we're going to look at the share price at around $200, so the earnings per share of $8 and a 5% growth rate. The stock intrinsic value is $154 on a low growth rate. If we jump that up to 10% growth rate, then you're looking at 237, so above fair value. And then if you're saying the earnings per share is going to double and stay at the same 10% growth, you're looking at 475 a share. If we drop the earnings per share down a little bit to 12, but we have a growth rate of 20, then you're bouncing to $600 stock. So is the stock a potential buy? At $200 right now, it's probably, it depends on what metric you look at. It's probably overvalued right now. But if you look at the $606, there's a 3x opportunity there for you. Possibly if they really smash it out of the park. But 20% growth is very hard to do over long periods of time. But yes, this is a stock really in the interesting phase here, Salesforce, whether it's a buy or not. It's definitely one I've got on my watch list. I do not own the stock. I'm just being clear and frank. I do not own the stock. That doesn't mean you can't invest into this company. There's a lot of positives, but the net income would really need to really jump up for me to really be excited about. They're obviously trying to do some more growing, but the PE ratio is probably not as high as I would have expected for a company like this if they really were going to grow to the end of time. So the growth might have stopped, and there might be the issue in looking into investing into Salesforce at the moment, with this cloud computing giant trying to take on the big guys. And return on invested capital is something they're going to really have to really work on to get that going forward if they want to be a top stock going forward. Anyway, that is a stock analysis on Salesforce and giving you a little bit of intrinsic value. Yes, in terms, well, I didn't say my intrinsic value. I would say right now I'd be wanting to get $100. I'd say the fair value is probably about 200. It's around where I'd say they are at the moment. I mean, they can continue to grow and really fly. So I really wanted to half in price. So at the moment, you're probably only getting fair value at the moment for the stock right now. So it's not totally over the hill, like way high. It's in a pretty medium space at the moment. It's not like way above where it should be. So it's a possibility as a stock for you. But thank you so much for joining me. Have a great day out there.